Hey and welcome. In this video I will show you how I personally are trading Forex market. So what I'm doing, as you can see, I have started a little. We mark up every place where we have a support and resistance. So we can see up here we have a resistance. So let's say now we are in this market here, and this support and resistance that you have marked up here, they will basically work all the way. So when you have marked them up one time, you will find them in the market also in the future. So let's say now that we are in this region, and we can see now, like I did teach you in another episode about trend lines, when you have a place where you can see touch it like 2-3 times, that's an area of interest for a trend line. So you can see here, for example, it's very easy to see that the market touched many times, and then we are looking for the market to turn. So you mark it like this, and then you can see we all the way up here touch many times this line. You touch it here also, you see, and you touch it here. But here you can see the first time the market is changing. That would for us be a place where we want to put a short trade. And there this come in also, this support lines. When you touch the support line, that can be an area you want to exit the market and then re-enter again when you see that we cross down, that you open in a bar below the support line, because then the support line will be a resistant. So, but let's see now, we open a trade here. We take a short position on this one here, because this is the first bar that close below our trend line. We put a decent high, because sometimes you can get something that is called a fake out, because the market makers, the big banks, they know that most people will put a stop loss right above the previous high, where you can see there. So put this comfortable up, because the market will fall down after a trend change. And you put minimum 1.5. You can even put 2 times, but in this case we used 1.5. And there you can see we would have taken a take profit around here. But yes, the stop loss is very important, because sometimes the market will just go a little above, because most people set the stop loss around up here, and that's where the market makers will come in and break you. So there you can see that will be a winner. But what we once again can see here now is that what you see here now, we are making a new trend line. So then let's do again, let's remove this one, let's trash it. We make a new trend line, we make it down like this, because once again you can see after this one there, you can see we are touching the third time. That means it's a new trend. So then what we want to do is to follow this, but this is the trend line in the wrong side. So we need to have a trend line in the another side, because now we are looking basically for a turn the another way around. So let's make this, let's put on this one there, and then you can see, you see the trend easier on this side, but that means you have a trend down. So then you can mark it already on this one there, and you can see we retest there, and then we can take a trade when you go out of this. Let me remove this, and now we are not going to upgrade. So here you can see is the first bar that are outside of our downtrend. So that means what we want to do, we want to go with a long. So let's move me a little more to the side here. We will then enter with a long. Let's take this one here, and like the another one, a comfortable stop loss. Comfortable stop loss means a little below the last low, because you can see there we got a little more down maybe. So always take a little more than the last low. Again, we go for 1.5. So let's take 1.5 there, and you can see we once again did hit pretty fast our take profit. Then we go in the market. We can see here once again, you can see we have a weak trend up, but it's still a trend. So we mark it. We mark here. We take where we can see the market is touching many times. This you see very fast when you train your eye. So we can say we can mark it like this. So already on this one there, we can see that we have a trend. Then we just mark it. We wait till we get a break of the trend, and that is on this one there. So we would open there. We go then with a short position. We take a short position on this one here. Once again, we put the stop loss a little above the last top, and the last top you can see is there. We take a little above. Again, it's because sometimes the market makers like to just take a little above to take out the stop losses people set. And once again, we take 1.5. We go down. We take what you can even see if you take even 4 times you would have won. So this you can choose yourself. I go with 1.5 because I see that the win rate is much higher with that. But I think you easily can, with this type of trading, you can take 2 times also. So that's completely up to you. Back test in the market. That's a good idea also for you. Go back the market, learn how to take the trend lines, learn how to set up this support resistance, because that's also some way so you can find a good place to put your take profit also, and stop loss. And if you think it's difficult to find these things, in the next video I will show you how Fibonacci work. Fibonacci typically will find all these areas for you. I don't typically like to trade with Fibonacci. Many like to trade with Fibonacci. I found it to be quite wrong, but it's a good way for you to see each important levels. So I will show that in the next video. So that's basically how I trade. I don't typically use this stochastic is from the last video, but stochastic sometimes can even show you the take profit levels. So let's see that in example here. You then enter the market here. So then you look in this one when you did enter, and you take profit when you can see we are below the line down here. That is, and then you can see you would then basically have followed more or less the same area like you would have done with the take profit we have here. So you can use stochastic sometimes to find take profit areas. So that means when you are in an oversold area, you take your take profit. So that's how you can also use stochastic to find a take profit area also. But it's not always correct, so it's better you go with a fixed stop loss and fixed take profit. Or you can also, when you come to this area, if you have, for example, a low lot size like 0.02, you can close only 0.01 and keep one open and move your stop loss to where you did enter the market, and then move it down equally all the way, and you might earn some more on your last position. That's also a way you can do it. I will make another video about that, where we are trailing to find a take profit. I will teach that in another video. So that's it for this one. On to the next one.